the favorable capital markets conditions are really part of the design. When the central banks decided to come in together with the governments, on the fiscal and monetary side, one of the things that they wanted to create were these favorable market conditions. So the fact that I can sit here now and say that, for example, the U.S. high yield index hit an all-time low last week, the fact that we can say that, based on what would happen in March is really extraordinary.
And, to pick up on that, on your point, extraordinary. Last week, we had an issuance by Lufthansa, which has now been downgraded to junk bond territory. That was met by a lot of demand from the investor community. The cruise ship company Carnival has also come out with an unsecured debt bond as well in the high yield market space. It seems to me that investors are flocking back into all of the industries that got hit by the pandemic. And here I'm talking about cruise ships, travel, airline, airports. What do you point that down to?
No, absolutely, and it's really started since the first vaccine news, and the trend is accelerated. So I think what you're seeing on the equity side is a rotation away from a lot of investors' COVID-proof portfolios, things like tech and obviously healthcare, and now into recovery stories, as they try to play normalization of the economy in 2021. You picked some great examples there, Lufthansa. I'd add the IAG rights issue earlier this year as well, and more to come. And I think what you'll see during certainly the beginning of 2021 is additional liquidity raised both in debt and equity, for those type of impacted companies as they look to set themselves up for hopefully a recovery in activity, mid next year.
Henrik, I want to shift focus to M&A specifically. The outlook for 2021 looks pretty good if you look at the evidence of the recent uptick in M&A activity from both sponsors and strategic acquirers, both of those sections of the market taking part. Do you think we are going to see a big M&A boom next year, given the macro backdrop that Jumana described and the fact that management confidence seems to be improving?
Absolutely. If you look at investment banking products, this year has been a boom year for DCM and equity issuance. And I think the pendulum is going to swing back to M&A next year. If I just think about our pipeline and the things that we're working on for next year, it's the busiest that we've been, for 12 months at least. And I think it's being driven by a couple of things. One is obviously the record amount of liquidity that sponsors have to spend. Plus, I think, for a lot of companies, the kind of economic disruption that we've seen has created consolidation opportunities across many sectors. So I think it's going to be a boom year for M&A, but also I think next year IPOs are going to be a big feature.
And on that front, you noted in one of your recent notes to clients that the big news recently in ECM has been the launch of the first European SPAC for a number of years. What does this signal to the markets? Is this the beginning of a new wave of this type of investment avenue?
I think so, and SPACs are very exciting. I mean, if you think about how much has been raised in the US dollar market, it's about 70 billion so far this year, which is just an almost absurdly high number, as investors are looking to, play, private opportunities, but, through the public markets. And what's very exciting about the, 2MX organic deal, which is actually still in the market right now, it'll close on Monday, is that it's the first time that we've actually seen one listed in Europe since 2016, I believe. And so what's happening is that a product which has been extremely popular in the US is now starting to find a home here in Europe. And I think that's going to unlock a lot of opportunities, particularly in local markets, because SPACs, to a certain extent, the investors are taking a bet on the individual sponsors and then finding a good opportunity. And I think having the ability to list those on European stock exchanges is going to drive market volume here to a much higher extent than if we have to go to the US.
But I mean, it's really interesting that it's only just catching up in Europe, and obviously it's more lucrative for the banks to get involved in these SPACs. But just to go back to your numbers, in the US, I believe there were 169 SPAC deals done this year. In Europe, only the one. Why is Europe lagging so much? And is it something to do with the regulatory framework, yet again, that seems to beleaguer any dialogue we have about new technologies and new types of asset raising that goes on in the continent?
No, it's really actually only in the UK where doing a SPAC is more difficult than in the US. So most of the European stock exchanges, you can do them. It's really an investor familiarity perspective. And I often compare it to what happened in the high yield market back in the early 2000s when I was first starting out in investment banking. Our first deals were 200 million, 300 million. We did maybe 6 of them a year, and we're extremely excited to get them priced. Now obviously the market has grown massively, and it's very comparable to the US market. I think over time the same thing will happen with SPACs. It's not going to all happen in a linear fashion, but I think as a product, it's going to become increasingly popular, and it'll never be the same size as the US, but I think we've definitely got a shot over the next couple of years to get it to 1/3 the size of the US.